S&P holds its ground as the Fed raises rates. Nasdaq holds with Microsoft plummeting. After hours, semiconductors are rocketing. We'll explain why. Spotify's massive reversal. Did people make a mistake in selling? Industrials making an all-time high. Companies out of the Dow days where you have ripping. Boeing coming out of a multi-year base. NVIDIA and why it's having a hard time at this level. There's something that you really need to pay attention to here, and we're going to dig into it. And we're going to drill into why is down 10% after hours, and Meta is up 5%, but they have a really big issue that we need to address. Most important, the S&P and the misunderstanding of what is happening with rate hikes. And we're going to give you 2 times in history where this exact scenario has happened before. It's really important to watch this part. Let's get to it. Hey everybody, welcome back. So I'm going to start with what I think is most important. Now this is the S&P in front of us, and we're going to look at this particular period in time. And from this December 2021 down to October, that is our drop. This is when inflation peaked. And since then, we've done nothing but go up. And it all started here. Now, it's just important for us to look at this and for us to measure that drop. And we can all see that the S&P from the peak down is roughly 27%. Now, we have Powell coming out and stating that we're near the tail end of the rate hikes, if there will even be another one, and they have a lot of data to make a decision before then. This is when you're starting to see all the naysayers come out and say, oh, well, by the way, as soon as they start cutting rates, the market's going to drop. That's not an accurate statement, and I really want you to follow along here. Now, in 1994, we had a GDP of 4%. Unemployment was 5.5, 2.6 inflation. At that time, we had Greenspan, even with inflation at 2.6, raising rates. Now you can see the Fed funds rate right here, 3.25, 3.5, 3.7, 4.2, 4.75, 5.5. This is all 1994. You can see how Fed funds rate went from 3.25 to 5.5 in 1994. 1995, we have GDP 2.7, unemployment 5.6, inflation was up a little bit more than the 2.6. He raises rates to 6%, 50 basis points on February 1st. By July 6th, he cuts. You have 5.75 and you have 5.5. We're going to focus on February 1st to July 6th, 1995. Now you should be able to see this, but if you go from 94 and you just draw a line across right here, and you can see March, April, May of 95, we start picking up. Why are we picking up? He's cutting rates. We're cutting rates in here. By July, we have the actual first cut. And what happens when we get that first cut? Market takes off. Market absolutely explodes up. This is the 1998 Russian debacle where they defaulted on their debt, but we're all aware of what happened from 98 on, and the market absolutely ripped. So the one misnomer I want to really hammer home is the fact that people think that based upon what's happened and the cutting that we're supposed to go down. When we're up and they cut, you have higher profit margins. Some sectors stay higher with the profit margins longer. Now, in 1980, 1981, 1982, you had CPI. This is CPI data throughout the years. In 81, you had 10%, 80, 13, 11, you can see it ticking up. This is when you had Paul Volcker in office. 82, we get a single digit, but 83 is when we crack 5%. That's really important. Cracking 5% is very, very important. So this was the last time we were this high in history before we are where we are now. And let's go and take a look at where we're at. So here we are at 8%. I think a lot of people are going to argue that we were actually higher than 8%. I would be one of them. But let's just say it's 8%. And then you go back from that level to a 5% level here, below 5%, 4%. So during that period of time in the 80s, raising rates, raising rates, raising rates. When did he cut rates? 1983, 82, 83. See this volume right here? Go and take a look at when Volcker cut rates. From that time on, you absolutely ripped. Absolutely. During these 2 periods of time are the most similar that we have to the current environment that we're in. I would actually argue that now is stronger than 1995, but I'll do that on Saturday. For now, it's really important for people to get this. One thing I keep trying to hammer home is that it's really important that you understand where your sources of information are coming from. Whether it's me and you find me getting in the way or other people, You really got to cull your informational feed right now, because a lot of people are trying to just get you to click or to like something. I'm actually trying to show you what has happened in the past, and that is the best indicator that we have of what's going to happen in the future. The ES and the S&P, where you're at on the hourly, you can see our levels right here, and you can see how that's locked in, actually perfectly locked in. And we were doing this morning and talking about these levels pre-market. You should probably consider watching those videos, even if you can't make them on time. They start around 8:15, 8:30 every single day. But you see these levels and how you're just bonking around right here. You're not really breaking out, and that was a pretty key indicator for us. We had NVIDIA trade on into this and did quite well with the trade, but it really got to the point where you could just start seeing it stall out, and that became the issue. So for me, an hourly close, and you might want to remember this or just screenshot it, 46.05. I'd like to see an hourly close above that before I start getting giddy here. Now, I am seeing rotation throughout the markets, and that is a good thing. In other words, XLI, and let's drill into this a little bit here. You're breaking out here on industrials, and that's really huge, and you're doing it with a bunch of names. So if you start looking at Boeing and what's going on here, this was a great quarter. Now, Boeing has been scaring me personally because of the 787, and you always think it's fixed, and then there's something else that comes out about it, but that's really hard to ignore. That's very hard to ignore, and if you overlay this with volume, it's very difficult to ignore that. So today might not be my day, but I can only write off so long what I'm concerned about when you start seeing a multi-month base like this. And when you go back, this has been in a downtrend for years, and institutions are looking for something to buy. This kind of turn right here is an institutional's dream. Like when you keep having these losses and losses and losses, and then all of a sudden you start having a gain. There are funds out there that will simply play that move, that little move right there, where you go from red to green. They'll just buy that. And this being an industrial, it's like turning a big ship. Once it gets going, no matter what direction it is, it's very difficult to get that going in the other direction. Staple. But now you're getting earnings growth again, and you're over that 200, which is really important. You have not been over that 200 for about 2 years. You can see up here, and now you're flipping it again. And I would be paying attention to this. I think this is substantive, and I think it's definitely something you should be paying attention to. I have a position in this. I'm doing quite well with it. I like it. And I think it makes a lot of sense. Now, semiconductors are in this rising wedge, which I'm never really crazy about these rising wedges. To me, they usually end in tears with some kind of move down. I'm not sure that that's what's going to happen here, but I do have this negative divergence of this RSI right here. Oops, that clicked off. Let's pull that up. And you can see that negative divergence right here and how you're rising. And that's a concern of mine, and I'm aware of that. But at the same time, we're getting some decent earnings. Lam Research is driving the market after hours, and you have KLA tomorrow, but we came out and their costs are down, their revenues are up, and their guidance is great. This is exactly what you want to see for chip makers as well. This is the kind of moves that you want to see, because if you're buying equipment, then you're going to make more chips because the foundries are going to move. They have to sell to the foundries, Taiwan Semi, UMC. If they're not selling to them, then they're not selling equipment. They're selling to somebody. And that's really what you want to see. Now, KLAC will come out tomorrow. You can already see it responding up 8 in here. And there's a pretty key level. Let me just drop this down a little bit so you can see that key level there and how you held that 448. I would watch this tomorrow, but I do see this rolling, and I'm not crazy about that move. It's there, but I need to pay attention to this because it's telling me that things look good. Now, Meta overall, to me, had a great quarter. The issue that Meta's having after hours, and now the conference call's going on, and they seem to be clearing it up, is they are spending billions and billions of dollars on the metaverse, and it's getting in the way of their profits, quite frankly. So I don't know if they're going to cut it, what their game plan is there, but you can start seeing after hours, after that initial push, you started coming back down to the reality. Now you're starting to climb. We'll see how this goes, but it was a great quarter. It really was. It's very hard to look at this quarter at 298, 332 billion, and you're beating on the revenue side and on the earnings side, and it's an enormous company. So this is not a small beat, and it shouldn't be viewed as one. Now, if you look at the company and you look at the earnings moves, this shouldn't be a shock. From here, we saw that turn, and they started talking about guidance. We saw another move here. Once again, you sell off before earnings, and then you're gapping up over new highs. Now, whether that works or whether that stops you in here, well, that remains to be seen. But overall, this is going to be extremely active tomorrow and something that I would focus on. CMG, or as people say, Chipotle, is coming in about 10%, and you're seeing a nice drop right here. Now, where do I think we can get to? I really don't see anything major to that 1750. You're in the gap. While you're in a position where you beat on the earnings side, you're beating on the earnings side and profitability is up. Why? Profitability is up for the main reason that when PPI went up and CPI went up, you left the cost of goods the same. So in other words, you're charging the same amount for a burrito, even though your costs to manufacture that burrito have dropped. And that's being shown in the revenue. Now, when that starts to drop like that and revenue starts to drop, that means that they're going to have to lower pricing, most likely, to get people into the stores. That means that you're going to wind up coming in. That is the problem that they're facing right now and something that we need to be aware of. I would expect to see some weight on this tomorrow. I don't think we're going to see a bounce or a follow through in this one. It's something that I think we're going to continue to see some weakness in. And speaking of weakness, we should talk about Tesla and what's going on here. Now, I'm very cautious when I see these negative divergences on names. Whether you use RSI or not, I got to be honest, I really don't care. I use it and I find it helpful. So here we are with this negative divergence, and here we go. And now you're here and you're the 22 and the 12 and you're crossing over. This is very similar to what happened before AMD started to roll. And I'm a pattern trader. I look for patterns and then I make decisions based upon that. The news later will tell me what happened and why it happened. So when I look at something like Tesla, that's an issue for me. This is a really big issue for me and something that I would watch. I got right there and I rejected. And until that turns around, I would watch that. I'll give you an example. I've gone through this a couple times, but you're having a heck of a time in here. And it all started with that 1222 cross. It's all going to start with that 1222, and it usually does lead to a test of the 55. It's exactly what happened here. 1222, and nobody thinks it can get to that 55, and here we are. So I'll just say that again. When you have a 1222 cross, your target starts to become that 55. That's where you tend to see some, or hope that you're going to get some kind of stability. And right now we're not getting that. And this is getting uglier. That's a new low close here. Not through here, but the past couple of weeks, that's a new low close right now. That's not great for AMD while we're looking at it. But I'm watching this roll, and it's not getting stronger, it's getting weaker. And we need to be cognizant of that. Now, Spotify, I want to talk about. I spend a little time on Spotify because I actually thought the quarter was okay. I think I was the only person in the world that thought it was okay. You missed on the revenue side, and the costs were substantial versus where they were. The bottom line is they spent a lot of money on intellectual property, on podcasts, things like that. They have since reworked themselves and gotten out of that debacle to some extent. And now they're going forward and they're changing those agreements. I think this is kicking in. I think that's why we saw what we saw today. And I'll just walk through this and give everybody a really quick tip, and you're going to want to pay attention to this. Let's do it this way, and then we'll turn this into a 5. When you have a major event like that, where you have a breakdown, just drop a VWAP on it. And you want to anchor a VWAP to that and use that during the next couple of days to make decisions as a guide. You don't have to trade off of it. In this case, it worked perfectly, where you could have shorted here as soon as it didn't break over, and then shorted it again right here when it didn't break over. Breaks over, comes up, comes down, retests, and holds. I was surprised it held. I can be as surprised as I want. Bottom line is that held. So if you want to just screenshot that, that's all you're looking for. And it's usually, you use it for like a day or two, and you'll find it as a guide. And it is very helpful. And it just tells you where the average people are in for that particular period of time. After a couple days, it starts to wane a little bit, and you kind of move on. I like the company. I'm surprised that we rallied this fast back up, candidly. Usually you have 2 days of this. I did not get 2 days. RIVN is one that we started buying in the Alpha Chasers community a while ago. We're in around 21. We're getting up there, but we're flipping this flag. This was the highest close that we had. I look for stuff like this, guys. When you have like a high close like this and you have a tough market like we had today, you want to pay attention to that. And that's going into earnings, August 8th. So I wouldn't sleep on this. Now, what you want to watch is right in here around that 28 level, you're going to have some resistance. But overall, into that gap, overall, this looks great, and it's acting great. That's just a 9 EMA that I have in there. NVIDIA, I really want to talk about this. See that 12 right here and how you're barely hanging on? You can see this here, we're down, trending up, and now we're setting up. And let me explain this. I know I'm covering a lot on a weekday, and please comment on that, but I think some of this is really pertinent. I got a lot of comments yesterday about the video and to be a little more detailed, so that's why I'm spending the time detailing this. But comment below. See how you're down? 1, 2, 3. Down, 1, 2, 3 up, even though they're not green. Now this is not the exact pattern, but down, 1, 2, 3 up. If the next bar is this, you have a problem. So you're going to want to watch this very, very closely. And they didn't make it easy. They did not make it easy in here. You have this little wedge here. But here's the key thing that I would take away from this. You cannot close over that 457.70. And you can't close over 460. We did a real nice trade in this during Powell's speech, and that was our level that we were watching. And you can kind of see how this went. We're in the call, and we just saw it move. It was a pretty simple trade, and then it came up, and that was the end of it, and made some money. But I was hoping that we'd push, get through that, get through 460 up here. We didn't get through any of that. None of that happened, obviously, and you can see that pretty clearly right here. But what does this mean? We didn't break VWAP. So we'll have to see what tomorrow brings with Lam Research and go from there. But I think this is very important. Microsoft, I did not think was that bad. Apparently, again, I am the only person that thought that. I just thought he was being conservative, but I guess that's not what they want to hear. Now, you are closing below the 22, you are closing below the 12, which you have done before. You have 3 days to get above that. If you don't get above that in the next 3 days, then I would say you're going to hit the 55. But at this point, quite frankly, you're really not that far off. You're about 332 on it. I don't like how these RSIs are rolling. I don't like how we're seeing these patterns over and over again where you are seeing these negative divergences and at the same time they're going higher. You don't know when they're going to roll, but they sure as heck look like they're setting up to just pull back a little bit. So this is something that we're really going to have to watch and we're really going to have to pay attention to. That's it.